I'm Alec Hogg, and with us are Magnus, Heystek, and Claude, Baissac. We're going to be talking about the events of the past week and bringing you up to date with where Magnus and Claude think we should be going to from here. Magnus, let's just kick off. We've got a little presentation here on the screen. Would you like to take us through that, and we can get through on that in just a moment.
Yes, good afternoon, and good afternoon to all the attendees. I believe we have more than 1,000 people listening and watching, which is fantastic. But let's just start with why we're having this webinar, SA QUO VADIS, because I think what has happened over the last 2 weeks in South Africa has shocked the nation from top to bottom, from rich to poor, from black to white, and people are saying, what actually happened? How bad is it? Can it happen again? And what does it change and what does it not change? In 40 years of being in this business, Alec, first as a journalist with you, reporting on these things and then actively in the financial world, this would rate alongside one of those historic events similar to 1976 or even earlier, 1969, the Sharpeville, and 1985, 1993 when Chris Hani was shot. And now we have the KwaZulu-Natal Gauteng riots. And what does it mean to South Africa? What does it mean to investors? What should we be doing? Should we be doing? We're doing nothing. So we're going to be discussing this. And Claude Baissac, our other guest speaker, is from Eunomix. And he's a specialist who analyzes and focuses on long-term structural developments and movements of countries, especially commodity-producing countries, and he's going to come with a different perspective than myself. But if I might just start very briefly, where we come from, and where I come from a apologies. Well, first of all, if you go back in time up to 2010. South Africa, if you can just go back to that first slide, Alec. South Africa and the Johannesburg Stock Exchange over a 110-year period, according to the Credit Suisse surveys, has been a fantastic place to put your money in. You've been one of the best performing stock markets in the world in dollar terms, equal to putting money in the United States and also in Australia. And your returns have been between 8 and 10% year after year in dollar terms. So up until that point, you were fairly safe that your investments would have given you very good returns because we had gold mines, the diamond mines, the platinum mines, and we were building a new economy after 1994. But that's the background. Around about 2010, if you look at this chart of the JSE and the discount that it offers now to emerging markets and also developed markets, something started changing around about 2010, and it has kept on changing ever since. And myself have been talking about this and recommending different strategies. But if I may summarize, 2010, we saw the commodity cycle taking quite a big downturn. And South Africa, commodity cycle producing country, we were badly affected by that fact that the growth engine of the JSE kind of disappeared, and it was absent from the Johannesburg Stock Exchange. That was one of the reasons why we at Brenthurst started recommending offshore investing. We saw this developing, but at the same time, we also saw something very exciting happening elsewhere, and mostly in the United States, which is 55% of the world economy. We saw that Silicon Valley was starting to innovate at a tremendous pace, and we had the listing of companies like Netflix, like Facebook, and I can carry on and on and on, and biotechnology companies were coming to the market. And South Africans were actually missing out on that tremendous boom in what was happening elsewhere in the world. So initially, our recommendation was to move some money and participate in those companies, the technology companies, the biotechnology companies, And at first it was non-political, nothing to do with politics. And around about 2015, if you look at that chart, Alec, very carefully, this is what this chart shows you. Our market moved in tandem. Around about 2015, 2016, you know what happened there. Jacob Zuma fired Mhlanhla Nene overnight. You had Des van Rooyen, fired 4 days later, and Pravin Gordhan came back. That sent a message to the rest of the world that all was not well in the emerging democracy in South Africa. And the foreign investors did not like, and I don't have a chart here of the outflows of capital from the JSE, but since 2015, almost 600 billion rand has left the JSE in the form of net sales from the equity market and the bond market. Our stock market started underperforming, our pension fund started underperforming, and today we still have, and that the next slide will show you, the massive difference in wealth creation for the average South African. If I may just refer you to the next slide. Yes, just a very simple example.
Is it this one, Magnus? Is this the correct slide now? Sorry, your user here is your operator is really not on the ball today. So is this the correct slide we've got?
You can use that one. The next one is actually the more shocking one, but this one, leave it. So there you have an example of just 10,000 Rand invested in our top 5 local balance funds, and you compare it with an equally balanced offshore fund. So you see, like for like, the balance funds offshore, and that is our balance fund, which is 10 years old, has vastly outperformed, even with the recent upturn in the local market. You made more money with less risk. That is when you're comparing balance funds versus balance funds. One of the reasons why our balance funds have done relatively well is that our bond yields have been very high, whereas your offshore yields have been zero. But the next chart is the next table is the very interesting one. And I'd like to spend a minute or two on that, Alec. So here is the same period of time, in fact, the same amount of money invested, 10,000 Rand. And I've compared our top 4 equity funds, and I've compared that with a very good US equity fund. It's not one of the technology funds or the biotech funds. It's a good American equity fund. Now you see the difference in returns. If you take the 10 years, and if you start at the bottom, the Old Mutual Investors Fund, a 10,000 Rand investment today is worth 21,000. Barely kept pace with inflation. In fact, if you strip out inflation and you strip out costs, you actually got back less of your money. Allan Gray is slightly better, 23,000. The 91 Equity Fund, 26, and then Prudential, 28,000, the best of the big SA equity funds over 10 years. The Franklin Opportunities Fund gave you 82,000 Rand for your 10,000 Rand. Now you can do the same exercise over 7, over 5, over 1, over 3 months. There's just been such a divergence in wealth creation for local investors versus offshore investors. And I'd like to use the following example. Let's assume 8 years, 10 years ago, Alec, you put in 10,000 Rand into the Old Mutual Investors Fund, and I put in 10,000 Rand into, or 1 million Rand into the Franklin US Opportunities Fund. Left it there, and 10 years later, we now compare our returns. For the Old Mutual Investors Fund, my 1 million Rand is now 2.1,534,000 Rand. My Franklin Fund gives me back 8.29 million Rand. Now, if I deduct the 2.1 of the Old Mutual Investors Fund, I'm still left with 6 million Rand in my pocket. I've got my original money back, and with 6 million Rand, I can go buy a house in Dainfern plus a new car for my daughter. And you can play around with this over a 10, 7, 5, and 1 year period. It might be a bit simplistic, but it brings it down to basics. Purchasing power of your money versus purchasing power of your money in a different country. And you can see that if you did not have sufficient offshore exposure, you actually have not made much money. I did the same this morning with the Rec 28 funds. And most pension funds in South Africa have not produced a real return to their investors over 10 years if you take out all the costs. So that's just, and I think there's one more chart, if I'm not mistaken, Alec.
There we go.
Alrighty, that's we can leave it at that. So now we have the situation, why are we underperforming? And Claude will come in with his other viewpoints. And I think it's very important. And even if you look at the drivers of the JSE, I looked at the 10 top shares in the 10 top equity funds this morning on the JSE. And they are as follows: Naspers, Anglo American, Northern Platinum, Glencore, BAT, Richemont, and then you have Standard Bank and First Rand, our two very large banks. So most of the driving sources of the returns on the JSE have been overseas listed companies. And in other words, companies that earn their money mostly or totally offshore, got nothing to do with South Africa. So actually by investing in the JSE, 80% of your money is invested offshore in any case. So one needs to put aside that argument that by recommending offshore investing, you're being disloyal to the country, blah, blah, blah. That's not the case, because the JSE, in fact, badly as it has performed, is mostly an offshore structure. So, but you are missing out on very, very exciting developments. And that, of course, is due to exchange control. And I'll get back to that in a second.
Magnus, I just need to stop you there for a minute. We're getting some issues from the audience to say they're not hearing. So I just need to make doubly sure that everything is coming through. If you can hear, please raise your hands. There's a little thumbs up. Okay, well, that's all coming through. So sure, hundreds of people. Thank you very much. Are you able to hear Magnus as well? Just double check. Yeah, let's just switch that off, and then please just let me know. Are you hearing the presentation? Hands are raised. That's fine. Good. Then I would like to, the reason why there are quite a few people who've come through to say they haven't been hearing the presentation, and I do apologize for that. But as long as you can hear it now, that's all good. The second point is to put a question onto the screen. If you have a look at your control panel, you will see that there's a little question mark there, and on the question mark, just click on that, and then you can write into the presentation. Okay. The problem that we have here today is that this system is overloaded. The GoToWebinar gets to 1,000 attendees, and then it seems to be hitting a few bumps in the road. So I do apologize for that. That's why we were a little late in starting our presentation today, but we're going to be sure that we'll go through the whole lot. We're going to also bring Claude in just a moment. We've got him, his audio for some reason is not working, but we will be bringing him in on the telephone. So that'll all be good. Magnus, back to you for the last few things, and then we can start heading on to the presentations.
The next slide, there's one more slide that I need to show you, the last slide that you should have in front of you, Alec, if you can move on to it. It's a 5-year return. And if you don't have it, I will explain to you what's on the table while you sit. There we go. Now, a lot of people seem to think that the outperformance of the JSE or the underperformance is based purely on the Rand. They think it's a Rand factor. Rand strong, Rand weak. The last 5 years has been very interesting. The last 5 years, the Rand has gone up and down in very big cycles. But the Rand today is about where it was 5 years ago, which is quite surprising by itself. But that has to do more with the weak dollar and global themes that have affected the currency, and especially emerging market currencies. Now, one would think, and this is just to strip out the effect of the Rand relative to investment performance of the world's major indices. Now, there you have a similar case. I've taken the Satrix Aussie index fund. Today, it's worth 14,000 Rand had you invested 10,000 Rand 5 years ago. So your returns look okay. It's about 5–6%. But if you put the same amount of money in a world index, which is us versus the world, and we're part of it, you've doubled your money. If you put it in the American stock market, the 500 S&P, that's 22,000 Rand. And if you want to be aggressive, your returns have more than doubled. You've actually trebled your money over 5 years. So the Rand has played no role in these returns. And why I say that is people automatically think a call on offshore investing is based purely on the Rand dollar exchange rate, which is not true. What is true here is that the underlying growth dynamics of the various countries come into play. And in the last 5 years, our economy has not grown. We know that. And this is what we see. Our stock market has not grown and has underperformed immensely. So one last point before we move on to Claude and debate. One of the biggest drivers of investment returns over the last 15 years, even 20 years, has been the large, innovative companies that have been formed all around the world, but predominantly in the United States, Switzerland, Germany, and Israel, and then, of course, China. And if you track innovation, or if you believe that innovation drives company growth, drives profit growth, drives stock market performance, which I do, South Africa has dropped back very sharply on the Global Innovation Index. In fact, we are not rated in the world anymore. We're not innovating anymore. And that is almost a clue to our future performance. Our performance in terms of innovation has dropped back sharply, whereas the rest of the world is speeding ahead at a rapid rate, and including those countries. Strangely enough, Israel is right in top, followed by the United States, Germany, Austria, and of course, China. And then a last point, if you take the top 100 companies in the world today, the top 100 listed companies in the world today, we don't have a single company in that universe of 100 companies. We have an indirect stake via Naspers process into Tencent, which is one of the largest companies in the world, but no South African companies in the top 100, whereas 30 years ago, we had several companies in the top 100, including Anglo-American and De Beers, etc., etc. So to summarize, if this was a marathon, a comrades marathon, South Africa is dropping back further and further behind. So therefore, my recommendation, and the one by Brenthurst, is based on facts, not emotion, not being disloyal to our country. It's not being unpatriotic. Our concern is the outcome to our clients 10 years or 15 or 20 years down the line. And therefore, we feel that this events of the past week has shocked a lot of people to seriously look at the asset allocation. And we strongly urge people to consider a substantially higher offshore allocation in whichever way you can in order to improve the likelihood of that outcome. That's all from me, Alec, for the time being.
Thanks, Magnus. We have got lots and lots of questions that have come through, so it's good to know that everybody can hear us. But more importantly, Claude, apologies for the tech that we've been struggling with, but I'm sure we can hear you loud and clear now. Do you just want to give us a little summary of the way that you saw events in the past week?
Okay, thank you, Alec. Can you hear me?
Perfectly, thank you.
Oh, wonderful. Well, Magnus, nice to see you again. It's wonderful to know that you have exactly 996 attendees, some of whom I believe have seen a less flattering part of my anatomy when I didn't know I was online. Well, hopefully that was the worst moment of the past 2 weeks in their lives. And now you can take any cup. I mean, literally. So what's my view? I would like to take a couple steps back, really, in this webinar, this conversation, and do exactly what Magnus has been saying, which is, let's just look at the facts, let's just look at the trends, But let's open up the breadth of factors that we take into consideration to try to understand what is happening, and on that basis, try to understand what's likely to happen. I think a lot of people are concerned about, at this point, the bottom of the Maslow's scale. Are we safe? Are we going to be safe? Are we going to be able to keep our jobs? Are we going to be able to have a future in this country? Let alone questions about investment returns and the like, which is a consideration for the very few. The vast majority of South Africans are looking at this situation and thinking that maybe we have stepped into state failure, the precipice of economic and societal collapse. And this is what I would like to address, and this is what I would like to bring some perspective on. I had a few slides to illustrate exactly where we are comparative to other countries, where we were 10, 15, 20 years ago, and what the data is showing in terms of where we are likely to go. So this is what we do at Eunomix. We provide a comprehensive view of country performance, and we then derive implications for strategy for our clients, and for risk management, and for investment, and for operational performance. So we go very granular so that we can provide some really data-centric perspective.
Claude, sorry. Yeah? First of all, we can't see your slides. Secondly, we have got so many questions to answer. Could you mind wrapping up so we could get onto the interactive part of this webinar, which I think is why we have 998 people here.
Well, so let's just say it very clearly. The question has been whether South Africa is a failed state, and the answer is no. South Africa is not a failed state yet. However, we view these events of the past few weeks as really a very serious set of incidents. We call it an insurrection because it is an insurrection. We expected something like that to happen last year because of the devastating socioeconomic impact and security impact, therefore, of the pandemic and the lockdown. This is not a surprise. It happened, and because it happened on such a vast scale, and because of the poor response of the government, and because of the unlikelihood that government is going to do anything meaningful about it, this is likely to happen again. There are a number of factors that are at play: political factors, tribalist factors, socioeconomic factors, leadership factors. And I think we need to be alive to the fact that this is something extremely significant, extremely serious, and that we are unlikely to see the kind of response that we want to see from government. I do not expect that we're going to get away from the, sorry for my French, but we are going to indaba the shit out of this, and we are going to investor roadshow the shit out of this, which is clearly not what is needed. Mm-hmm. So I think what we need here is we need a very powerful signal from the citizens from across the board, and we need to reach out to one another. Labor unions and businesses need to put their differences aside, and they need to reach out to one another. Civic society organizations need to be supported, and we need to stop looking in and we need to start looking out to one another, because we need to finally find a solution to one of the fundamental root causes of the crisis, which is a state in itself, a state bureaucracy, a government, if you will, an executive that has seen its capacity and its legitimacy to provide basic services eroding.
Brilliant. Magnus, for some reason, we've stopped seeing you. I hope your webcam hasn't, you're back again. Okay, thank you, Claude. Thank you, Magnus, for those introductory comments. We did start late, so we're going to carry on for at least the next half hour, 35 minutes. There are a pile of questions. I'm going to start with the first of these from Daphne, who says, Now that we are living permanently in the UK, what benefit would offshore investment from South Africa have if we aren't taking back currency to South Africa? Magnus, I think that's a pretty simple question for you to answer.
If I understand correctly, there's absolutely no benefit. I mean, if you're living in the UK, you should invest in pounds or dollars because your expenses are priced in that. And if you are watching the currency, that's another factor that could impact you. So if you are living in the US or the UK and you have SA-based investments, it would be highly recommended to liquidate and take it back home. You might end up with a declining currency, and the purchasing power there will decline over time. This is the strategy we recommend to a lot of our clients who have immigrated but have pension funds in South Africa. We will maximize the offshore exposure in their living annuities, and they can then draw down that growth, or they can draw down the maximum. Because if you're living in the UK and your pension is in South Africa growing at 5 or 6%, and the currency is declining by 8 or 10, you will get poor over time. So that's a very easy call to make. You repatriate or you buy dollars or pounds.
There's a question here from Yop, and just to remind you, when you do ask the questions, I will only have your first name or tell your first name. So you are guaranteed, if you like, of anonymity. Yop says, Mr. Heystek, is the offshore outperformance possibly driven by an overvalued offshore market, further possibly indicating a downward correction or a crash?
That's a question that relates to market timing, and I normally don't try and answer. You know, for the last 10 years, every now and then there's some reports that the overseas markets are overvalued, but the growth has been significant, especially in the tech stocks. So had you tried to time the market, you would have come very short because you would have missed out on the phenomenal growth of the US market. Now, I do know that there are fairly extraordinary global situations currently in place. I'm talking about the massive expansion of the US Federal Reserve balance sheet and the amount of money that they pumped into the system. But at the end of the day, the returns are the returns. And whether you got them because of luck, of currency devaluation, those are your returns. That doesn't mean it'll continue into the future. Therefore, you need to be very open and alert to changes in the marketplace, and you need someone to manage your money who's aware of that. But the past is the past, and you've made a lot of money by having most of your money in dollars. Whether the market's expensive or not, there are far smarter people than myself to try and answer that question, and I'm not even going to try.
Okay, the question from Evelyn was just if you could repeat what the US investment fund was that was shown on the 10-year schedule.
That was the Franklin Templeton US Opportunities Fund. Now, just as a background, people said, oh, you're lucky you just picked it in hindsight. We've been using that fund for 15 years. I have personally been to Templeton in the United States 20 years ago. I've had seminars with Sir John Templeton while he was still alive. So we've been using at Brenthurst the Templeton funds for many, many years, in fact, for 20 years and more. So it's not a lucky shot. We have that fund has been in our portfolios for 10 years. It's the Franklin US Opportunities Fund, and it's only available to you in South Africa on the Momentum platform or via one of the Brenthurst offices.
Here's a question for you, Claude. It's of interest. It comes from Pitt. He says, it's of interest that many South Africans are at the forefront of innovation overseas. Our innovators, however, are leaving where the environment is not so conducive to innovation here and going over there. So how do we turn this around?
Well, you're absolutely right. We have, this is a tragedy of South Africa. Amongst all of the African, sub-Saharan African nations and peers and near peers in the emerging countries world, South Africa has had historically incredible infrastructure, incredible human capital, incredible capacity to innovate. But specifically for the past 10, 12 years, as Magnus has demonstrated. I mean, the turning point really for me for South Africa is the departure of Mbeki as president and the replacement of a fairly progressive president by a populist know-nothing and his coterie of gangsters. Now, they have had no interest in fostering a business climate, an investment climate that actually takes opportunity of the enormous endogenous growth capitals and opportunities that Africa has. And this is really the tragedy. I mean, countries across the world, emerging countries, would kill to have the kind of assets, natural and social, and even political in terms of the constitution that South Africa has. But we have a government and the ruling party who not just do not value this, but are actively undermining it to the best of their ability. And so, the question is really the investment climate and the policy environment that exists. And we have things like an SEZ strategy, which is supposedly pioneering investment environments, micro investment environments, which would make it easier for investors. But the paradox is that the government has replicated in SEZs the kind of business obstacles and red tape that replicate what's in the country. And as we speak, I'm engaged with a number of stakeholders and the DTIC to try to convince them that if they are not going to reform the entirety of the economy for all sorts of political economy reasons and vested interest and lack of capacity, at least allow a few SEZs to exist and not be the top-down DTIC-controlled stuff that we have seen in Kruger and in Port Elizabeth and in Richards Bay and elsewhere, but really to have private sector-driven SEZs that foster investment, and not just in manufacturing, but in service sector innovation, etc. And this is, I think, where the problem of South Africa is that citizens do not lobby. And one of the key issues with that is that our parliamentarians don't report to us, they report to the parties, because it's a party-less system. But it is time for South Africans of all races, of all gender, of all orientations, of all regions, to actually do something about their outrage and their requirements and their demand. I mean, already I can tell you what worries me is I've seen in the business community a bare 2 weeks after the facts, if that a week and a half after the facts, people saying, oh, Cyril has been amazing and it's all going to be back to fine. We're going to put the basic income grant and that's going to extinguish the fire and we can go back to business. No. And I think it is up to South Africans to not just moan and complain about the situation or panic about it, but start putting actual civic society pressure so that not reform-wide efforts can happen, because it's just not going to happen. But at least there is pressure to create improvements in some areas of the investment climate.
Okay, as you can see, I've put my glasses on so I can read these questions, but there really are a lot, guys. So please, can we keep our the answers as short as possible? Sean asks, he says, with all quantitative easing in the US, Magnus, don't you think that their stock market is in the biggest bubble that can become the biggest crash in history? Jim Rickards, Harry Dent, Michael Schiffer, Robert Kiyosaki, etc. think so.
Well, Harry Dent has been predicting stock market crashes for 40 years, and he's been wrong again this year. He predicted the Dow Jones will be at 5,000 in June. Yeah, I don't pay attention to them, Alec. There are just too many guys who come and go. They make wild predictions, and if they're right, they will remind people. But if they're wrong, they'll quietly keep quiet about it. I would rather, follow the real money, what Warren Buffett has to say, and the large companies of the world who actually control the money, serious money. And if the markets are too high, they will correct. Anybody who's involved in offshore markets needs to know that in your lifetime, you will have 3 or 4 major corrections. If you're not prepared to live with that, stay away and put your money in Volkskas Spaarbank. But you know, that's part, that is.
It doesn't exist anymore. Die ploegbank is oor.
Or Bullen Bank or whatever. If you're in the markets, but you get my message.
I get your message. And Gordon says the same thing. He says, yeah, totally agree with Magnus. However, many commentators, including Jeremy Grantham, in the past week talk of US stocks being in the biggest bubble of history. I get it. I get what you're saying. Here's a good one from Charles for you, Magnus, as well. He says, gut feel or based on science? What percentage of a portfolio should be in South Africa on the JSE and the rest overseas? 50-50?
The answer is, in my view, if you have a pension fund in South Africa, which you cannot influence because it's managed by the professionals, and you have a property or two in South Africa, which is a rand-based asset, and you have a local business which is priced in rand, or 100% of your discretionary spare cash must go offshore or into offshore assets. 100% is the answer. And many people are shocked when I say that, you're disloyal or get out of here. I'm saying these are based on facts. Because your other two primary assets, your property has not done well for 13 years. It's done particularly poor in dollar terms. You are buying less and less home in dollar terms with your rand home. People will be shocked if they understand how little a property in South Africa, when converted into dollars, buys you today. It's horrendous. So why would you take your spare cash and put more into the two investments that have not grown your capital? You have to take 100% offshore.
Claude, here's a question for you from Evelyn. Should we sell our properties now, or do you think the market will still rise as time passes? I'm glad they asked you, because I know what Magnus's answer would be.
I don't provide investment advice, is my answer. What I do is I provide contextual analysis of the economy and the political sector. And there, you know, as a property owner in South Africa, well, I've been taking a serious nosedive, as Magnus has been saying. Will we look? The question really is an hypothetical. The problem of South Africa is political, and the solution of a political problem is in politics. Until such time as we have a government and a ruling party who puts the economy first, we will continue to experience economic crisis and social dislocation. And therefore, you know, I tend to, as an owner of a property and as someone who's in business, to agree with Magnus. I mean, limit your exposure in South Africa to the maximum. And if you are investing in South Africa, then know that you are taking a huge risk and take a chance to invest in the long term, you know, in case things turn around.
John asks, why do you expect no meaningful response to change, or I guess he means to the developments of the recent couple of weeks by the government? Again, for you, Claude. Why do you expect no meaningful response?
Sorry, can you repeat your question? I had lost you a minute there.
Okay. Why do you expect no meaningful response by the government to what's happened in the last 2 weeks? In other words, why would they not change anything?
Well, because we have to understand that the causes of the events are, the proximate cause is internal ANC politics, right? And that hasn't been resolved. That hasn't been addressed. We are still to see massive amount of fallout from that, from an internal ANC political standpoint. And it's all about who controls the ANC, and it's all about who controls the provinces from political standpoint. And there is more trouble to come from KZN particularly, which means that if the ANC is divided, then cabinet does not have the authority and the ability to make radical changes. I mean, you would expect after something of that nature that the members of the security clusters who were in charge of intelligence, in charge of anticipation, in charge of response, would be put to the cold and made accountable. But that hasn't happened, and it's not going to happen. When was the last time a South African minister was fired for doing the wrong thing rather than fired for doing the right thing? And there is your answer.
Yeah. Rhett asks you, Magnus, he says, you talk about shifting one's assets to a more hard currency offshore centric proportion. In your view, what percentage threshold would you suggest as an optimal onshore offshore asset allocation? Are you seriously saying 100%?
Yes, I do. I mean, if you actually look at the statistics and if you go through my graphs and charts and an analysis and in the broader context of having other assets in South Africa which are not producing, it just makes common sense. If you want to participate in the fantastic innovation elsewhere in the world, it has to be 100%. I don't buy the story which is perpetrated by the asset managers that 30% is enough or 40% is enough. They are misleading the public because they are saying that because they are restricted to only offering 30% as a result of exchange control and Regulation 28. But if you speak to these fund managers in private, they will tell you that their money is offshore, but they understand that they have to sell a product which is defective at this point in time, because Regulation 28 and the restriction, as I said, over 10 years has caused that nobody has made money in their pension funds. Many people have sent me emails and letters and statements showing to me that over 7 and 10 years, they have less than they put in as a result of bad investment decisions, overexposure to property, and those things. And those are facts. They are for real. People are going poor. And the only thing, and I agree with Claude, unless the ANC does not have a dramatic change of heart in its economic policies, this will continue. We will continue to become poor. Now, it's a classic case of shoot the messenger. We don't like what he's saying, but I think people are waking up to the fact that this, unfortunately, is the reality, and they better take steps to defend themselves.
Yeah, it's there's a big wake-up call in the past couple of weeks. Here's a question for Claude, and I think it's more a statement than a question, but it'd be nice to get your thoughts. How can there be growth when there does not seem to be any rule of law or enforcement thereof? It's from Ronnie. He says this has to be a fundamental pillar, surely, of any investment.
Yeah, absolutely. This is the duty of the state. This is the first priority of the state, the imposition of the rule of law, the enforcement of the rule of law, and the protections of citizens and property and assets. And what is very clear, and we have known this for quite a while, is that South Africa is a very poor performer in that. Now, I'd like to add a comment to that, which is the fact that we have to accept that South Africa effectively remains, in terms of the structure of its economy, the inheritor of apartheid. And we have to accept the fact that we all have responsibility in that. We have direct political responsibility by voting the ANC in. We have direct responsibility by accepting some of the things that have been taking place. But we also have to recognize that until and such time that we reach out to the other side of the divide and we become part of the solution, the periphery of the country, which represents a political majority, is going to become more and more agitated and less willing to compromise with the center of the economy. And that is a grave danger for me. So the rule of law, yes, but the rule of law, we don't start at it. We get there through a political process. We did it once in 1994. The question is, how do we get back to that?
Paul asks you a follow-up question. What flags, red or green, are you looking for, Claude, as an indicator on the trajectory that the country is taking?
So my work is data-centric, okay? It's very important because this is such an emotional issue. And there is so much subjectivity. And as Magnus said, there are so many vested interests, including in my profession of risk consultants and strategy consultants. So many vested interests in telling people what you think they want to hear rather than what the facts are. So we look at the performance of South Africa just the way we look at the performance of other countries. In terms of the immediacy of the situation, the most important red flag or green flag is going to be the reaction of cabinet, and that's going to be based on the reaction of the ANC command structures. And at this point, there is nothing we are seeing that is telling us that they have taken the measure of the seriousness of the crisis other than from a factional, personal vested interest standpoint. And so this is what we need to look for. We need to look for political signals in the ANC, and we need to look at political and policy signals in government. And I'm afraid that the notion that we are once again going to take the top business owners or executives of the country and holding hands going to dance in front of foreign investors, been there, done that, that's not going to cut it.
Donnie from Pretoria wants to know, Magnus, would you advise investing in offshore property over the long term?
If you can afford it, if you're fortunate enough to have that kind of money, currently there's a fantastic boom in property. So you're buying at very expensive levels, but the US has been a very good place to put your money. I have experience, my wife and I have a little flat in London that has done phenomenally well. And then also I speak about my little place in Mauritius, which I did not buy for investment purposes, but has turned out to be a fantastic investment. So we are missing out, and it's not reported in the press, again, vested interest probably, that the world, the modern civilized world, New Zealand, Australia, whole of Europe, is currently enjoying one of the biggest property booms in history. UK property prices have gone up 15% in pound terms in the last year. We don't report about it because there's no interest. And if you compare it with our property market, you know, it's just been a very, very good rand hedge and also a domestic growth situation. So it can be a very good investment, provided it generates some kind of return in the form of rental income.
Kevin Evans, sorry, Kevin, I've now let it out the bag, but Kevin says, please remind all that you can invest offshore through the JSE via global companies and global index ETFs, and that one can start with small accounts. Okay, Pierre says, how is the NHI going to impact all that you have said? Sure, that's a big question, Claude. Hopefully there's a short answer.
Well, look, I'm in favor of the NHI in principle. I think the health insurance sector in South Africa is a scandalous situation. I think the inequities and inequalities of access to health is just unacceptable and inexcusable. Obviously, the problem, and I have huge gripes against the private healthcare companies because they are really riding the consumer and making huge profits on the back of health. Health is a right, not a privilege. And it's a human right, and it's in the Constitution of South Africa. Obviously, we cannot begin to imagine that government would be able to manage it effectively if we just look at what they've done with the parastatals or their own municipal provincial budgets. But I think what we need is somewhere in between a solution. It would be wonderful if private sector, government, municipalities, labor unions all got together and created a kind of non-profit, trust-based mutual fund in the mutual, not in the private investment sense, but in the mutuelle, in a French sense, in a German sense, of a socialized healthcare system, but that is managed professionally and that is affordable to all.
So that's a solution. It's such a big question, but let's move on to this. This is probably the key question of the whole webinar. It's from Pierre, and he says, Magnus and Claude, should I stay in South Africa with my young family? And if so, why? Magnus, you want to kick off?
Sorry, the sound is very bad, Alec. I can't hear.
I thought you might throw the ball across.
I would tell people to be honest about their view of what's going to happen. And I was saying, if you have the chance to externalize your career and even your family, considering what's taking place in South Africa, I would probably say that you should take that chance, even if it's just for 5 years or 7 years, and if things improve, you can always come back. But just to tell them, no, don't go. It would be a great disservice to those people if things turn out to be as bad as it can turn out. I think the one issue that we haven't touched on, Alec, if I may, is saying, what does the ANC need to do to change someone like Claude and my view about South Africa? And that, as Claude mentioned, it depends on the ANC and the cabinet. And unless they don't change their strategies, get hold of law and order in this country, my recommendation to a young family like that is to go with my blessing, because there are bigger forces at play than just the individual's rights and the loyalty to the country. So probably I'll say yes, go. But there could be a turning point one day, and I'm not so sure it's going to happen soon. But let's just assume that the ANC gets control. And I think they must start with law and order. Law and order, we talk about it all day long, but it has to be practical. We talk about, we haven't mentioned that 3 or 4 weeks ago, Alec, the general manager of Rio Tinto in Richards Bay Minerals, was shot and killed, and they declared a force majeure. That was already the first inkling that there's something wrong in KwaZulu-Natal and that there is something brewing. But the government has done very little about the burning of trucks in Moya River for many, many years. They've done very little about the Zama basically taking over mines. They've done very little about the construction mafia arriving at mines and construction sites. So the government has allowed this absolute wave of lawlessness to fester, and we've now seen it. They were totally impotent to control this uprising. They were ineffective. They were totally deurmekaar, as they say in good Afrikaans. They had no idea what they were doing and what they should be doing. And if Cyril Ramaphosa doesn't start firing some cabinet ministers and having some, balls, as Brian Pottinger wrote in on your website, you seriously have to worry about where South Africa is going to end up 5 or 7 or 10 years from now. We need something to happen. But if the ANC buckles down and doubles down on what they have been doing, which brought us to this position, then it can get very, very bad.
So, Pierre, you've got a very strong view from Magnus. I'll throw my 5 cents in after Claude has answered your question. Claude?
Well, it's a difficult question to answer. I'm not a South African citizen. I wasn't born here. I wasn't raised here. I don't have family here. My kids are South African. And it's already an agonizing consideration for me, considering how wonderful a country it is, and considering how high, I was when I came here in 2000, 2002 with a promise that was represented by the new South Africa. Look, I'm looking at it, personally, because I have small children and I'm concerned about their ability to have career and futures in this country. And berkeley enough, I'm a French citizen, I'm a Mauritian citizen. I have options. But I will say this, what is rational at the individual level can become irrational at the collective level. If all the people in the middle and upper middle class leave South Africa, then it becomes a self-fulfilling prophecy. Then there is no left, there is no center to hold anymore. And all we have then the extremes, the extreme rich who benefit from a crony capitalist system and from government corruption, and the extreme poor who represent the majority. And that then leads to the kind of explosions on a scale magnified to what we've seen It's so difficult. And we know of so many South Africans who have left South Africa looking for better lives elsewhere, and then realizing that, the grass isn't greener there. There's a counterpoint to what Magnus has been saying, is that in South Africa, we still have extraordinary quality of life. And yes, there's double taxing, and that impacts the quality of life. But I can assure you that what you gained on one side of the balance book, you lose on the other side of the balance, on the balance sheet. Living in Europe, living in America, living in Australia is not easy living. These societies are machines, and you fit in or you fuck off, is how it is. Forgive me for using that language. And you have to find ways to fit in that nobody cares about you. You can't get the kind of house you have. You don't have the kind of weather you have. And you don't have the kind of sense of nationhood, traumatizing as it is or not, that you have in South Africa. And so I would say, if you can export your business, if you can securitize your income, if you can use this extraordinary boom in the new economy, which is that we are delocalized from where we work, then South Africa still, I think, has a lot to offer. But you have to be hedged. You have to make sure that you have income in foreign currencies and investment in foreign currencies, and you have, in case things go bad, an escape plan. It's not an either or. It's a complicated personal and collective calculus one has to make, but one has to keep with the finger on the pulse and not delude oneself one way or the other.
Pierre, I think that Claude is really, I love that, but keep your finger on the pulse, because it's very personal and it is very complicated. And I would just give you some other little inputs to add into the package. If you are from in the white community in South Africa and you are not an entrepreneur, then you must realize that your prospects are certainly not enhanced in the because of historical and all kinds of reasons, and you can argue this one way or the other, but you're not going to have as good an opportunity in South Africa as you might have in a less racially defined society. So that's the first part. If you are, however, prepared to be entrepreneurial, take responsibility for your own future, I don't think you can find a better country in the world. The risks are high, but the rewards are also high as well. So to me, it starts off from the basis of where you are. If you're an accountant and you want to be an accountant, you want to work for somebody else, you might have a better career elsewhere. However, if you are somebody who is prepared to hustle, to get out there, to find new partners who you might not even think about as being partners today from different cultures and that, well, this is a great place. And the other point that I would like to just suggest that you put in the back of your mind is that we are social animals, and we're a social species. And if we do go into different environments, that whole social network needs to be rebuilt and restructured. Now, the good news for you is that there are certain parts of the world where there are big groups now of expatriate South Africans, and it's pretty easy to plug into those, but they will never be quite like being at home. It's a tough question and it's a tough decision, but in the wake of what happened in the past week, my personal view, and maybe this is my optimistic nature, is that something has shifted, something big has shifted. And although we're talking still about politics as though the way it's existed in the past, the whole political environment has changed. And I'll just give you one little point that came through last night from a discussion that Magnus and I were having about a client of his in Ballito. And maybe Magnus, just correct me here, but the people in Ballito, the community in Ballito, knew that they were going to have their suburb, their town, trashed by the looters. So they went on to, remember, Ballito in the middle of KwaZulu-Natal. They went on to structure barricades to make sure that the looters never came in. This wasn't just Ballito. This happened throughout KwaZulu-Natal, by the way. And then the police came and told these guys, Magnus, correct me if I'm wrong, that they must go, and they said to the police, we outgun you, we outman you, we are not going to lay down and allow the looters to destroy our town. You go, police. Now, if that's accurate and that's true, that's what the Afrikaner cultural groupings have been telling us now for 10 years, is that you have to take care of yourself in this country, and you do that best by becoming becoming an active citizen and becoming part of the community of communities. Magnus, just did I get that wrong?
100% accurate. There's only one entrance into Belita, and these guys got together in their hundreds with their buckets and their shotguns, and they blockaded the bridge over the highway, and they managed to keep the hordes of people away. They chased the police away. They said, you're breaking the law, you're parking on the verge. It was totally ridiculous. And they said, we are not moving, we are taking charge. And eventually the police left and went away. But if you listen to this person, and he's been living in Belita for 20, 30 years, he tells you there's a big difference to watching these scenes on TV and actually being in the middle of it. And he said he was petrified for his life and for his family. And you know, that, as you said, something has shifted. There's a primordial fear which has now come to the fore, is that homes and farms and suburbs can be invaded by mobs, and you can't control it. It's just uncontrollable. And then the police are not there to defend yourself. And as you said, I mean, communities will have an upsurge. People will join Neighborhood Watch. They will join groupings like the AfriForum, the security arrangements, etc., which is a very, very good thing. But there was a shift in the mood in South Africa over the last 2 weeks.
Sorry, Alec.
Claude?
Alec, I need to jump in there because I agree and I also disagree. I agree, but Magnus, I have a sense that you are exclusively speaking here about white South Africans, and if that's not the case, then my apologies. But I think it's very important to not racialize this, and it's very important to understand that this has become a social class problem. You know, it has. Yes, there are undertones of tribalism and politicization of the old, Zulu, ANC, IFP battles, and Zuma on top of that. But I mean, you know, I was speaking on SAFM yesterday for about 45 minutes with political analysts, and the consensus is general. You know, the entirety of the country is shocked. The entirety of the population is shocked. And I mean, yes, it's tempting to go back to the lager mentality. And to some extent, it is necessary to do that. But then it needs to be an extended lager, and it needs to be extended to all those who are victims and exposed to this. We can't revert back to, we can't let this. And this is extremely dangerous because that's also the self-fulfilling prophecy. If we turn this into a black on white issue, then we will devolve this thing into some sort of a civil war in time. Let's be very careful how we speak about this thing.
Claude, sorry, you're on the wrong track here, but sorry, you really are. I'm from KwaZulu-Natal. I know the communities. I spoke with a lot of people there. It's not a black and white issue. It's a class issue. You're spot on with class. When the communities pulled across all color lines, it was people who lived in suburbs, who'd worked hard, who'd got themselves into a position of being perhaps a better income status. It is certainly not in KwaZulu-Natal, where the whites are relatively small. It's very, very much a multiracial thing. It's a question of middle class saying, we aren't being protected by the police. How are we going to protect ourselves? And I'll let you know, in Pietermaritzburg, and it's very well documented, the Muslim community, who are the major shop owners in Pietermaritzburg, ruled that town after 2 days. They took it into their hands and they looked after the place. So it's not a racial thing. It's much more a question of, is it law and order? And if we can't be guaranteed law and order, really, one has to go plug into where it is. But I think your point about class is very good. It's not. I truly don't believe it's a racial thing. Certainly not coming from that province. But guys, we did start late, and we've got so many questions. Maybe I'm just gonna pick up on some here. Some practical questions. Etienne says, as a pensioner with an RA, how do I get my money out? Magnus?
Good question. A lot of people have RAs. If they're older than 55, very strong recommendation, mature it, transfer it to a living annuity where you can get 100% offshore exposure. RA restricts you to 30, living annuity, 100% offshore exposure. Very, very strong recommendation.
Okay, there's another one here from Bruce who says, well spoken, Claude. So he completely agrees with, and I think we all do agree with what you had to say a little earlier about that. He goes into his view that cometh the hour, we need a leader, and he gives his vote to Herman Mashaba. Do you think, and I love Herman, but wow, you know, to come into the scene so late, do you think he's going to be a force to be reckoned with, Claude?
Yeah, I do. I look, it's a difficult one again because there are things that I like about him, and there are things that I profoundly dislike about him, including his kind of, you know, xenophobic, anti-black foreigners outlook, which I think is very dangerous. And you know, in a situation like that, it's very tempting for political entrepreneurs to find the bogeyman and go after the bogeyman without addressing the real problems. And the real problems are South African made, they're not foreigners made. Look, the political system has betrayed us, not the constitutional system, right? And to a large extent, the problem is that there are fundamental contradictions between the national democratic revolution ambitions of an ANC, which is torn between constitutionalism and rule of law on the one hand, and the party owners come first and burger society. What we need to do, I think, is the country, because it is an emergency of the type that we have said, of the 1960s and 70s and 80s, we need a new united democratic front. There were conversations about it after MBQ was phased out of power. Nothing came of it. COPE was created as a party, and immediately it fell into personal politics and territorial politics. And this is what is really the problem. To what extent can citizens and business, I mean, business has a huge role to play in no longer pandering to whatever government and the ANC say, but actually taking firm stands and reaching out to the labor unions. I mean, I've been in conversations with labor union leaders for years, saying to them, guys, stop with the Marxist bullshit. Stop with the 50, 100 years behind rhetoric. You know, you're not fighting white monopoly capitalism in this country. You are not fighting for socialism tomorrow. You are fighting for the survival of the employed, working, and middle class, from the private sector to the government sector. And at some point, like in the DRC before, and like in Zimbabwe before, and like in Zambia, the economy will start destroying the middle class. And when that's happened, then it's too late. There are objective interests of businesses, business organizations, large and small, labor unions of all political colors, of all sectors, for civic society organizations, for apolitical organizations to get together and reinvent politics in South Africa from the bottom up. That is what is needed.
We've had a lot of thumbs up, Claude and Magnus, for the straight talking, for the views being expressed. Steve does ask, though, Claude, are we not at a point where moderate South African citizens need to take control by withholding taxes from the government to fund our security and other local services? Again, well, that could go on all day, but
well, let me just say one thing. You know, the president is on Twitter. You know, maybe it's not much, but start by tweeting and twittering, and start by making noise and organize local demonstrations. You know, those communities that defended themselves, well, they need to become political organizations. You know, start doing no more. I will not encourage you to break the law. But certainly, I've been thinking maybe some sort of a class action lawsuit against government for not doing its job, for not utilizing the tax revenues properly.
Well, that's what Herman's busy doing. Herman Mashaba has already launched that. So if you want to join him, you're welcome to join him. There's so many other questions just to close off with, because we really have taken a lot of your time and our community's time. We did start late, so that's the reason why we've overrun a little. There is a question here about class again. The middle class. Sandra says that the economy is already destroying the middle class, but then there's a follow-up. But what about the enclaves, or the middle class enclaves, that have shown they can and did defend their collective properties? And this is from Bruce. He says across racial divides, and he makes the point of the taxi association. And I must admit, the interview I had with James Martin, who is from Ngonglovo district, which is Pietermaritzburg and area. He's very tapped into, works very closely, used to work with the taxi association. And he said, were it not for the taxi association and the way that they forwarded their own enlightened self-interest, because for them, if there's no malls, there's no business, that the KZN and certainly KwaZulu-Natal, Pietermaritzburg would have been in a much, much worse situation. So I guess if there's one thing that's come out of all of this, that is there's a very powerful counter force in the middle class called the taxi associations, Claude.
Yeah, absolutely. Listen, I mean, I've always loved the taxis. I remember when I started, I lived in Nairobi, Kenya, and the matatus, the taxis, everybody reviled the taxis because of their street behavior. But I've always said, these are entrepreneurs. These are people who are acting rationally in the best interest and in the vacuum of law and order. It is, what happened was simply extraordinary in terms of the roles of the taxis, because they are the middle class. They are us, they are our friends. And I mean, I'm going to say something. I vastly prefer the taxi driver on the road who is vastly more courteous to me in terms of letting me go than the rich, South African blonde lady in her 4x4. That's going to be controversial. But yes, I mean, jokes aside, this is where the foundation of the renewal of South African politics is. The labor unions. I mean, I had a chat with Joe Matunjwa. I mean, I know Vavi very well, and I'm trying to take these guys over the line, and say, let's all get together and forget about the ANC and forget about political parties and forget about politicians for now. Let's organize. And very importantly, your enclave, your little spot there that did well, open the gate a bit further. There are poor communities out there. There are people who have nothing to lose because they have nothing to gain from the system. And these are the people who are also acting rationally. Looters are not irrational people. They're not criminals. Yes, there are criminals, and it is condemnable to have rich people driving their rich cars to game and pick up TVs. That's outrageous. It's criminal. They should be pursued. But people who steal bread and water and nappies and milk and then are harassed by the police and the army, they speak of the level of despair and dysfunction in our society. We need to protect them.
Let's close up here with a couple of passing comments. Magnus, your views? Bring it all together.
Just to summarize, my views on offshore versus local is actually a false debate. It's driven by vested interests to trying to keep control of their assets, which are not performing. So they see it as a onshore versus offshore divide fight, which is rubbish. It's not true. It's one asset class doing better than the other one. Secondly, remember, by creating an offshore portfolio, you give yourself optionality. You give yourself freedom, which you may or may not have to exercise in future. If you have all your assets in South Africa, you limit your freedom, you limit your optionality, and if things go from bad to worse, which it can happen, then you might be stuck in a situation where government steps in and says no more exchange control outflows, everything is locked up like a Zimbabwe scenario, your rand tumbles and you become very, very poor. So remember what I'm saying, it's about freedom and about optionality. and it's about protecting you and your family as best you can.
Claude, your last words?
Well, you know, what's rational at the individual level can become irrational at the collective level. Whatever you do, do what Magnus is saying you must do with your money. But don't quit on South Africa, at least not yet. I think there's still a big fight to be had. And maybe this is the moment where the real democratic South Africa arises and develop. It's going to be difficult, but it's doable on account of the vast amount of assets we have, natural and social. It's an extraordinary country. Let's not let it go yet.
Thank you, Claude. We are blessed by our people and cursed by our leadership. And maybe this is going to eradicate the curse. To be fair, to be balanced, and to finish off on maybe a more positive note, if you were to take South Africa pre-December 2017 and imagine what had happened at the elective conference on the 18th of December 2017, where Cyril Ramaphosa, due to a last-minute switch from the Mpumalanga candidate, actually prevailed when he wasn't supposed to have prevailed. Can you just imagine where the country would be today? And I think that is a reflection of how far we have come and the potential for how much further we can go. We've had the Zondo Commission. We've had communities who've got a huge wake-up call. We've been urged for pretty much decades now to become active citizens. And if you aren't going to become an active citizen after what happened in the past fortnight, well, then I'm afraid it's just never going to happen for you. But this is a country, it's a developing country. Remember, it is one where we have unique challenges, but also unique opportunities. I'm Alec Hogg from BizNews. It's been our pleasure to be with you today in this Brenthurst Wealth webinar. Thank you, Magnus, and thank you, Claude. We look forward to a technically more hassle-free webinar next time round, but I think full value today, and look forward to it in the future. Until the next time, cheerio.
Okay.
Well done, Alex.
Thank you for joining us for this webinar, which is compiled and produced by the team at BizNews.com. A recording of this webinar will be available later today on the BizNews.com channel on YouTube. From our team, until the next time, cheerio.